Hello there and welcome to Active Trader Live, brought to you by TD Direct Investing. I'm Kim Parley in for Greg Bunnell, who is getting some well-deserved time off right now. We're working pretty hard, so good to give him a chance to get some downtime. This is, as Greg says, your educational one-stop shop for in-depth market analysis, investment insights to boost your trading potential. Coming up, we're going to check in on the markets and what a day yesterday for the markets. We're currently holding the equity highs of yesterday's rally, but inflation coming in a little softer than expected. We'll dig into that. Walmart also reporting this week, a good bellwether on U.S. consumer and supply chains. And then the big debate. Kieran and Jason are going to battle over Chinese tech titan Alibaba, which ripped yesterday, up 6% on news, along with everything else tech, on a pause in U.S.-China tariffs. Is all the good news priced in? It's all coming up, so let's get to it. You're watching Active Trader Live. All right, let's start things off by taking a look at the S&P 500. And as I mentioned, what a day yesterday. I mean, it was everywhere, everything moving up on the equity side. There's a look at the S&P 500 right now. Now, the focus of the news today, after the big news yesterday, of course, was the inflation data. Now, U.S. CPI was up about 0.2% in April, year over year, about 2.8%. The expectation was it was going to be higher. So this is actually one of the smallest increases we've seen in inflation since 2021. But so we'll be watching to see, whether that's sustainable. Most of the commentary is it is not. We've got tariffs not in place yet. Of course, supply chains have not been affected yet. And also, remember, there are in plans, we're hearing there's more fiscal stimulus coming down the pipe from the U.S. government. And when that kicks in, of course, that is inflationary as well. So we'll have to see how that plays. I will say, though, within this data, egg prices down 12.7%. So that's going to hit a headline in the States right now. Gasoline prices down as well. So we'll be watching to see how that affects the markets as we move forward. But again, holding steady after a big day yesterday. And the market really seems to like the fact that Scott Bessent, the U.S. Treasury Secretary, is now in the driver's seat, or that's the interpretation, making some of these trade deals. All right, let's take a look at the heat map. As I mentioned, things are pretty green right across the board, especially seeing a lot of the big tech names. Anecdotally, I can tell you right now, I think we're about 3% higher for a lot of those tech names than we were on the Liberation Day sell-off, about 5% away from the all-time highs, though. In the right-hand corner, though, you can see some United Health, Johnson & Johnson, Eli Lilly under a little bit of pressure. A lot of this just some of the ambiguity around the healthcare names right now. We heard some news from President Trump yesterday that perhaps we could be seeing more direct-to-consumer sales, disintegrating or getting rid of some of the middlemen, the pharmacy benefit managers, and that's affecting some of the pharmacy stocks as well too. So interesting just to see that 1 point of weakness overall. Let's focus in on a couple of stocks that are interesting. Here's one, Coinbase. Now, Coinbase, for those who don't know, cryptocurrency exchange. This is the first digital asset player to be included in the S&P 500, which is why it's on the move today. They're going to be replacing the credit card issuer Discover Financial, which is being acquired by Capital One. So obviously, and I don't need to tell this group that are watching this right now, you're pretty read in terms of why this matters. But the minute something becomes part of the S&P 500 and tracks the benchmark index, everyone who is buying the index needs to include that in their portfolio. So that's interesting. As well, Coinbase announced not too long ago they're buying a derivatives exchange called Deribit in a $2.9 billion deal to expand into the crypto options market. So interesting. They are moving forward and being included in the S&P 500. Before today's move, just to give context, they were down 17% in 2025. So this is going to bring them up just about 7% so far this year. And a reminder, companies have to have a market cap of about 20.5 billion to meet profitability, liquidity, and share float standards. To get in there, in March, we had DoorDash, Williams-Sonoma, TKO Group, and Expand Energy all added to the S&P 500. Okay. On the other side of the ledger today, there's a look at Hertz. Oh, interesting. It's pulled back up. Now, Hertz came out with its first quarter results, disappointed, revenue down, missed estimates. They talked about being impacted by reduced fleet capacity, which was down about 8% year over year, as Hertz intentionally ran a tighter fleet amid macro demand uncertainty. Why do they have a tighter fleet? They are a turnaround story. They are going through restructuring right now, one that attracted Pershing Square's Bill Ackman into this stock. They announced a 20% stake back in April. And of course, it rallied about 50% on that news. But so far today, we're seeing a somewhat, I'll say, a muted response on the news of those results. Keep in mind, this was a $35 stock back at the end of 2021. We are not there right now. All right, let's get our technical take. All right, we are back with the stars of the show. I've got Kieran, I've got Jason here. How are you?
Great, Kim. Good to be in an esteemed company today.
Esteemed company. I'm an esteemed company. I told these guys the one thing is I can't break the show. I have to give it back to you and Greg and everyone just in good shape. So don't let me do that. So tell me what.
Good start.
All right, here we go. Okay, so let's start off with the technical take. What are you looking at?
Yeah, let's start with the Dow Jones Industrials, of course. You know, big news coming out of the weekend with the trade truce in place between the U.S. and China.
Yep.
115% reduction on both sides of it. So the import duties stand at 30% coming into the U.S. and 10% into China there. But why we're looking at the industrials, because this is really the bedrock of the American sort of businesses that thrive at this. A lot of transportation names are in this in the Dow Jones, of course, we know. One of the big things that I wanted to look at with the Dow, we've seen it also, I've got the charts pulled up. We've seen it break above this key support on that news that came out there. It's inching back towards that 43,000 mark, which is maybe they're going to be that resistance. This is going to capture back those previous sort of what was support back in early March. We can see if it's going to incur resistance and bounce back off of that or break through it. Now, one of the other things that I wanted to look at and peel back was, okay, so what do these new sort of restrictions place? I know one of the big things was freights were kind of frozen for the longest time doing this. There was a whole bunch of lined up in China, weren't moving.
And I have to tell you, it's funny, I was at an event and not too long ago where I was meeting a logistics guy and he said everything was just being stored, on the East Coast and in Vancouver, and like they're doing pretty well. They can charge people a little more for storing it in Canada until things thawed out, right?
And so now everything's going to be back on the move there. And what that also means is freight costs are going to go up because of the surge in demand that's going to be. Front loading was a thing that happened in March just before the big tariffs kicked in. I'm assumptively going to say we're going to see some front loading as well because it's a 90-day in place, this truce right now. We don't know what's going to come out of it. But what this also means, even with 30 days, even with 30% on the books, with a lot of small businesses, gross margins for most of these companies are 40 to 50%. If you throw 30% import duties that they're still bringing in, that's still going to compress their margins quite significantly. Along with the cost of actually shipping those things for front loading. But what's going to be the beneficiaries are the rails, the logistic transports, the roads, the shipping companies. They're obviously going to, for the next little while, going to be benefiting from this. So this could buoy up the Dow Jones Industrial Average. We'll look for that key 43,000 level. If it does come off of that, we're looking back down to about 41,000. I also just drew an inverse head and shoulders pattern that just formed over here. This is usually considered a bullish continuation pattern. So what we might see is a bit of resistance. It might bounce back off, but we should see it break through this 43,000 and go back to try and capture the all-time highs in that 45,000. But we've got a little bit of the summer to see out to July to see if that can unfold there.
It's amazing how quickly things turn, huh? Like just, I was thinking of having this conversation 3 weeks ago that we could see this. Okay, so Dow Jones, watching the transports, industrials, see what's going on. China ETF.
Yeah, I've got a China ETF. The ticker we got is MCHI. It's a broadly based China-based ETF issued by iShares. We're not seeing quite the same reaction in the charts that we see in the American side, with this trade deal. We didn't see that kind of rally. I know the Hang Seng and the CSI 300 in China yesterday rallied about 2% or so. But based on this ETF, we're not seeing large candles. Usually you want to see big, significant pushes on the candles. Like you can see this big one over here we had back in, this was back last year. I'm going to date myself.
This was their big stimulus play.
This was the big stimulus when Beijing introduced this. And we know China's come out of a rocky period, where they had the real estate market that was down there. They injected stimulus into the markets. And this has kind of acted as that base support once it did break through it. Around this level at 48, it's kind of inching up, but it hasn't yet captured that $60 resistance, which is where it could push up to there. So now with this in place, that could reinvigorate, I should say, the Chinese markets as well. And potentially what we could also see is if they are going to add further stimulus to this. So this is one to just keep an eye on, but I'm a little bit skeptical just because we're not seeing that same buy-in as we're seeing in the U.S. side of it. And that may be just because they're not importing as affected by the U.S. market.
I think it's really insightful. I mean, because, we have all this euphoria, but, it's fine, it's great. It's like, wait a second, it's not showing up in that chart. And I think that tells you a little bit. Because I think people were thinking you're hearing the commentary that was very positive for China, and that's just not showing it quite yet.
Yeah, and this is certainly the case where China needs the U.S. more and that exposure to their market.
Yep.
But we'll see what the rest of it shakes out for there. So that's the one to keep an eye on there for us.
Next,
we've got the loonie. So I figured, we've had a bit of, we're coming into the summer now. Usually we see some demand now. The reason why I wanted to look at the loonie was our economy is very intrinsically connected to oil. Crude oil. It's one of our biggest exports that we have here. So the ticker I've got pulled up is XDC. This is the Philadelphia Canadian Dollar Index that we're looking at. Now I've actually mapped it up and we've tracked it through the years. And what's been happening is we did start peaking because the US dollar, the greenback, was peeling back on all this, recessionary talk and everything. There was lower demand being priced in. But obviously after the trade talks, we've seen the loonie have some bearish pressure on it. One of the other things to also note is when you look at the interest rates, so some of the things that affect the currency, we obviously know it's going to be some of the commodities that the countries export. In our case, it's oil. Yep. But also looking at the interest rates in the US, for example, they're kind of the 10-year sitting at about just under 4.5 there at the moment. Whereas we are sitting at 2 3/4, 2 7.5. Now, as this yield differential, continues, or if it continues the way in the path it does, it just means there's going to be more demand for the greenback versus the loonie for us. Yeah. And that could just mean there's going to be more bullish pressure, and we could see some downward pressure. But going into the summer, we typically see more demand for travel. Now, given it's a different circumstance this year,
and we're hearing there's depression of tourism into the States right now too.
Exactly. So what that all really hinges on is what's oil pricing going to do? I mean, OPEC is pumping out oil and they're creating a supply glut.
Yeah.
So that just means we could see the loonie come down to about the 70 range, which would be that support area, maybe the happy medium that they want it to be, potentially up to the 72 cents.
There's so many interesting. I would say right now, being a technical trader and looking at the technicals is, probably more important than it's ever been, because you think about Canada, there's a new cabinet coming in that could change tax policy in the longer run. If Absolutely. You have, more attractive tax policy, attracting more investment, because right now Canada is not seen, I would say, as an attractive investment. We've seen, money flow out of Canada from the oil patch too. So there could be some very I'm going to make up a word here, catalytic. That's not a word. There you go. With it. But that something could be coming, so it'll be interesting to see if that gets priced in, right?
And we've still got our trade deal that needs to be worked out. Yeah. All of this, right? So that might be a little bit of another catalyst.
Yeah, exactly, right? Okay, you've got Walmart on your radar.
We're talking Walmart.
Yeah, the earnings are coming up soon.
Earnings are coming up this week, and as you mentioned, kind of viewed as a bellwether of the U.S. economy. We're tracking kind of consumers to see how they're feeling, and we'll see how their spending habits are recorded kind of at the retail behemoth. The Walmart themselves, they do have substantial exposure to tariffs. Where Reuters did a study and found that nearly 60% of their goods are coming from overseas. Yeah. And these are like the who's who of where things are coming, like Vietnam, India, as well as China. So lots of exposure. I know the tariff news coming out last week. That's certainly good news for the importers, but there's as you said, there's just a 90-day window, so not enough time to make any long-term definitive plans here. And Walmart itself might be better equipped to deal with tariffs just based on its scale and based on its size. But interesting enough, they pulled their Q1 guidance earlier last month, but they did reaffirm kind of what they're expecting for the full year. But there's an interesting comment that came from the board saying that they may actually need to spend more of their money, talking Walmart corporately, to keep prices low for their consumers to ensure that they're going to continue to get those same source sales numbers where they need it to be. But jumping into the chart, one thing I found interesting here is if I pull up some drawings here is that even with a slight earnings per share beat and a revenue beat, there was a big gap down just based on softening sales numbers at the end of Q4. Now we can see here I've got marked on the chart when the reciprocal tariffs took a bit of a pause. So much like anything in the market, we did see a big green candle popping up, and the chart was trading in that direction, but the gap was not able to be filled in when we're leading in towards his earnings. So there was, that value wasn't continuing to be reaffirmed by investors. So it's one of those things. And the last thing to leave everybody with here is even bullish analysts out of Bank of America, they're saying same-store sales might be less impressive than expected coming into Q2, and we're still going to be listening for earnings per share growth around 4% and EPS around 58 cents per share, and they're looking for 160 $65 billion of revenue. So stay tuned for that on Thursday.
It's, and there's so much, it's funny when you talk about them spending money. The reality is prices are going up. Either they swallow it or the consumer does. It has to come somewhere. So, we'll have to figure that out. What are you going to be watching? When we had the chart up, what are some key, I'm not sure, the levels or things you're going to be able to be watching with the Walmart chart? Because it's just been, up and to the right for so long.
It has been. So I'm a trend guy and I'm a support and resistance guy. So it's like we hit a new high is not too long ago. We're looking on the chart back all the way in March. So see if we can test that. Yeah. And then once we get beyond there, we're then starting to look in second and third levels of resistance. So I kind of want to look for those zones where the company has. There's a definitive pattern. I always want to find interesting areas in the chart and so patterns where that I think can be useful to traders.
All right, awesome, Jason. Thank you. And I think we have any more on the technical side right now. That summarizes it.
Right now.
All right, we got more coming though. If you have a question for our team, here's how you do it. You can send us an email to td.activetrader@td.com. And for more information on the Active Trader platform, this is how you do it. See it on the screen. There's the QR code in the bottom right-hand side. It take you to our TD Active Trader Live website. There you can find more information about all of our trading platforms under the Get Started tab, so you can find the one that is best suited to you. And if you're interested in trying out the TD Active Trader platform risk-free, I love this. You can open a practice account by clicking on the Try TD Active Trader button. And that is a great way to get going. That's what I needed during COVID was a practice account, not what I actually did when I tried to do things on my own. It didn't work out so well sometimes. So that's all the information on how to get to TD Active Trader Live and get that practice account open. All right, it's time for trading, debating, and Kieran and Jason are here. I've threatened them already. They usually get, I think it's 2.5 minutes to talk about their respective sides. I told them I'm just going to hit the button when I feel it. I'm not going to do that. But I could. I'm just going to test it out here. That is how it works. So, okay, today the stock we're talking about is Alibaba. You guys couldn't have chosen a better one to talk about today, just given everything that's going on.
We knew it in advance.
There you go. Yeah, right. So I should find out what else you know in advance. That would be an interesting thing to know. Okay, so Alibaba, I was joking earlier, we almost need the entire show to explain what they do, but I'm going to try here. So it's a Chinese multinational online workplace. They do B2B, B2C, they do wholesale, they do retail, they do cloud computing, they do AI, they do digital payments, logistics, and streaming video. That's kind of like...
That's a good summary.
That's everything they do, right? Yeah. Okay, so just a reminder to everyone who's watching that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk and may not suit all investors. Significant losses are possible. So it is important to assess your own risk tolerance and make sure you do your own due diligence before engaging in trading. All right. So before we start, just why did we pick this one?
Yeah, so we were talking about it, but it's often dubbed the Amazon of China, right?
Yeah.
It's a huge e-commerce platform in the world, one of the largest, I would say. But for me personally, I think what came to attention to me about Alibaba was Singles Day. Now, this is the largest, unofficial. It's an unofficial Chinese holiday for single people, which is astounding to me.
Yeah.
But it's
as a single person, I appreciate that.
Yeah, exactly. But it's a day to just splurge. Yeah. In other words, so it's
treat yourself.
Treat yourself, and they're big in the AI space as well. So it would be a good one to look at there, see how it's shaking out.
All right. Okay. So let's getting my rules out here. So we're a reminder to everybody. You each get 2.5 minutes, right, to do the discussion, and then 3 minutes of a back and forth, and then 90 seconds at the end, and you will tell us how to trade stated positions. So I believe, let's see how it works here. Kieran, you get to start things off.
Yes,
Go.
I get to kick it off. All right. So I'm going to be representing the bulls in today's debate, of course. Alibaba Group Holdings, which is a massive conglomerate, as you mentioned, Kim. I'm going to pick on 3 points that I'm going to argue my case for. Their leadership in the AI space and cloud computing growth, their fundamental valuation, and also their very aggressive share repurchase program or buybacks that they're doing. So let's start with the leadership in AI and cloud computing growth. They're the global, Alibaba Cloud is a global leader. They have about a 5% global cloud market share, which is currently about $217 billion in market value right now. It's the leading cloud provider in China. Now, this is the second largest in the world for cloud computing and ranks 4th globally across the board there. Now, when you talk about like compounded annual growth just in China alone, all right, that's sitting at about 36% for this market, which is projected to reach 293 billion by 2027. But Alibaba is in the front driver's seat to capture most of that growth that's going to be coming through in the next couple of years. So that's why I'm kind of bullish on their growth. The other thing that's also happening in the AI space is when you look at their revenue drivers, and this is what the big growth is. 33% year-over-year growth is what they're doing. Annual EBITDA came in at 1.5 billion on last year with room for margin expansion. And then their AI model, we talked about this. You know, DeepSeek shook the world up when it first came out, but Alibaba has its own AI model called Qwen 2.5 or 2.5 or 3 is what they call it, the new version of it. And this one had outperformed DeepSeek on many different tests, multimodal testings, based on its natural language processing, compute, and on reasoning and everything. So it was way far above it there. I'm going to keep an eye on that thing. One last thing I'll mention on valuation metrics, for PE sitting at 12x. If you look at Amazon and some of the other companies, they're in triple digits. Sorry, not triple, double, 33 and 45 with Melli. So valuation standpoint, very cheap. Let's go in the chart real quick. I've got Alibaba starting with the weekly chart that I pulled up over here. I just wanted to bring this thing because Alibaba did have a bit of a downturn for a good spell of time. It broke through that bearish move down. It is now broken above a major resistance previously, which is now that 120 mark, which is sitting above there at the current moment. I'm going to just quickly do a switch to my daily chart, and we're going to just bring our new drawing sets in and just show everyone what we have over here. Okay, so we've started a new uptrend off of these lows coming off of April over here. We resumed this bullish trend. You can see the price actions just hovering over it. 130 is the support right now, resistance at 140, but what I'm looking at is the RSI and MACD. They're going into upward trends over here.
Does he do this because I'm here? He's pushing a little over the time.
I actually spill over it.
I feel like I'm sorry. Too. We'll take all the time we can get.
All right. That's good. Yeah. I took notes. Okay, I want to be the one to decide who wins. I know I don't get who wins too, but it's really good. Very compelling, and a very compelling chart as well. Jason, give us the other side.
All right, I'm on the other side. So I am the bearish side of Alibaba. So once China's shining... Oh, we're done already?
No. Okay. Starting.
Once China's shining beacon of tech prowess, Alibaba has kind of really been struggling to reinvent itself over the last number of years. We're trading closer to we are trading closer to 52-week lows, but we're still off by more than 50% of those heady days we're talking 3 years ago. All right, so let me throw out some phrases. Let me see how you feel from a comfort level as an investor. Tech crackdown, antitrust concerns, multi-year corporate restructuring. These aren't things that lead you to believe that you're clamoring to kind of to vote with your dollars. Then we factor in weakness in the broader Chinese economy, increased competition from players like JD.com, PDD, DHgate, Timo, even ByteDance, of TikTok fame. They own a Douyin. I'm sure I'm mispronouncing that, but that's another player in the space. Even with the wide moat, life is not getting any easier from Baba here. And then I've already gone off one hand of macro and micro kind of challenges. Two big hot button global economic or global issues. First is Chinese and Hong Kong relations. Nearly a half decade of protests seemingly quiet now. We have legislative elections coming up later in the year in Hong Kong, so we're looking to see how that. And then I haven't mentioned tariffs. Yes, tariffs. They've got a reprieve. We know that, but there's already talk of higher levels coming back in. If there's not a deal that's continued to be struck. True, it's only 13% of Baba's revenue comes from outside of China, but these are things that are out of their control that are going to impact the incorrect shareholder confidence and directly into the price. So let's jump into the chart so we can take a look. So zooming back out of the chart, we can clearly see after the 3-year period we've seen some into the troughs, but to Baba's credit, they've been trading up, achieving new highs. What I've noticed on the chart is we've achieved what we're like to call a double top. So it's on its way to forming. We can see that they achieved new 52-week highs, 148, but then immediately began to pull back on some of that tariff-related news. And now was it the 9th of April when the pause was announced? Except for China, we can see that there was a big bounce up. But if we zoom in even further, what's noticing to me very similar to about your China ETF that you were mentioning, either. There's no really big bullish candles that are taking place here. We've got small, even with gaps in place, these small candles that are just not inspiring confidence that we're going to see these trends continue. And if we do get those pullbacks, I just took some time to draw the fibs on the chart as well. If we can pull back to that 61.8 level, which is historically when the trend's broken, that's when we'll know that the double top is confirmed.
Compelling case on both sides. Again, I've been told I'm not allowed to declare a winner. There are no winners. Again, educational purposes only.
We can talk after.
Well, yeah, okay, we'll talk after. But okay, so take me through, when you just to kind of build on what you've been talking about. I mean, even the time scale. When you take a look at that long chart, it's not looking so good. The double top's not looking so good. But then when you looked at the shorter term, there was some real upside there. So tell me what we. Argue with each other.
Okay. So
no fisticuffs, no hitting, but argue.
I'm going to start with Jay's point about the geopolitical risks, of course, that he mentioned about the government and restricting sort of the growth of these companies. I think they've come to a good point. That's in the past. Like we talked, you mentioned that was in the past. The protests, it's a thing of the past. In fact, one of the things that I noted was even Xi Jinping had invited a lot of these tech leaders, Chinese tech leaders, to come together and at a forum to see how they can progress. It's in their mutual benefit, of course, not to shoot them down. But the other thing that I also wanted to mention was on the AI side of things is when you look at CapEx spend, they're doing about 53 billion right now is what they're putting in right now.
Wow.
On their AI model, cloud computing. And their markets are really insulated right now to China. But the other thing to that was, Jay, you mentioned the tariffs are a non-starter for them because it's about 10% of the revenue, 13% is what you mentioned. But they have a presence. Their e-commerce wing is present in 190 countries. And I thought to myself, how many countries do we have in the world?
Yeah.
We have 195.
Yeah.
So they're pretty much in the entire globe, barring like Antarctica or wherever else.
Not every country is going to be substantial.
Not substantial, of course, but they've got diversified revenues. This is what to say. And the e-commerce is the big puller. Taobao and Tmall are the domestic wings, but AliExpress, Lazada, which is in the Southeast Asia market, that churns about a lot of revenue. In total, you're looking at 47% of the revenue drivers.
And Taobao and Tmall are substantial revenue drivers, but they are actually growing at much slower rates than the larger portions of the company. So there's thoughts that those areas of their business might be of reached maturity, or it's that extra.
That's why you have AI.
Or it's that extra
you have
competition that might be. Well, here's where we think about AI. So we know that it's expensive. I know. Yes, there's DeepSeek has proven that it can be done for less, but Alibaba is showing that, sure, even with a debt to equity at 0.23, it is on the lower end of the scale, but over a 3-year period, that's trending up. And what really make me stop and pause a little bit was there was a 39, let's get that right, because even more in my favor, 39.5% increase in terms of their total debt, which increased almost $32 billion last year. So it's that expenditure of cash, it's the borrowing of cash that's going to not always going to be.
You're going to have CapEx spend. This is all part of the CapEx spend that you're going to take on debt to be able to grow your balance sheet. What's important is you have to understand, even with the CapEx spend, net profit margin has risen over the years. So they're currently sitting at 12.2%. Gross margin sits in the high 40s, just shy of 40% right now. And that means there's operational inefficiency. Even with debt, if you're not managing your debt properly, then these numbers are going to affect you. Also, with interest in everything that you have there.
If we ignore the past, we're doomed to repeat it. So what was one of the things around the 5G networks, right? There was very hesitancy to allow Chinese players into the market. Those same concerns are popping themselves up again when we're talking about the cloud space as well. And Western governments are raising some concerns.
You don't need Western government. China alone is the second largest economy in the world.
But
if they just capture market share there, that's all you need.
Simmer down. Simmer down. But it's compelling, and I have to say, you've convinced me on both sides, which is probably not the good way to trade these things. Let's talk about how you would execute if you're feeling bullish or if you're feeling bearish at this point too, because this is the entire point. So tell me the way to make this happen if you believe that it's going up.
Yeah, absolutely. So I'm actually going to go back to the charts here, Kim, and we're going to go peel back from capturing its previous highs there, right? I did mark up a level right now based on its current price, which is sitting at just about shy of the 130, which is its key support at the moment. You see overhead resistance sitting in that 145 range going into earnings coming in here. Now I'm going to bring up the option chain because the trade I'm considering is a long trade. It's going to be a long-dated options trade that we're looking to do.
Yeah.
So I'm actually going to go out to the December cycle.
Yeah.
And I'm
long as December. We're talking years.
In this case, we're not going further out, but we just wanted to keep it up to December. But the trade I'm going to consider doing is a long call condor.
Okay.
All right. So let me unpack this one for you. So let's just go out to the Decembers here and just bring that on my option chain over here. it'll help to have the right ticker in there to begin with.
Shopify's interesting.
Yeah,
though, but,
this is what happens. It was stuck from last week. Okay, there we go. All right, so here we go out to December cycle. So what we're looking at to doing is, and I've already got the trade sort of built in over here, but we're looking to do basically a debit call spread and then sell another credit call spread above it. And what this does is it just reduces our overall cost.
Okay.
And it also means it reduces our overall net income. So the trade itself that I've set up, and you can just see my order entry over here, is we're looking to target buy the 120 strike, sell the 180, because I think the move up until the end of the year we could see a push up to the 180. So that's a 60-point spread, and then the credits we're selling above that is going to be selling the 200 strike and out to the 260. So this is an even on condor. Now, the total cost right now showing is about, we've locked it in for about $17.
Yep.
So what that means is our break even right now, based on where we're buying the call at, is $137.
Got it.
So by December, what I need for Alibaba to do is at least be at 137, because then that way I keep what I spent.
Yeah.
But ideally, I want it to push up to 180.
What's the risk in this one, and if it doesn't?
So that's the risk. Okay, so there's two sort of risks to this. The bigger risk, of course, is if it just doesn't move. If it drops below 120 nearing our expiration, we're going to be out the $17. It's a single contract, so that's about $1,700. The other risk to it is if it goes too high too fast. Okay, so if it goes past this 200 mark, we start seeing diminishing returns. We're not losing yet, but we will. But based on our net profit, which is the upside to this trade is about the difference, which is going to be $43 in this case. So the spread is $60 here, minus the 17 I spend, which is 43 there. So if BABA goes past $243, then it starts eating into our profits and we start incurring losses again. But again, we're only capped to our losses up to the $17 there. So those are the two things to keep in mind, watching those levels there.
Interesting. Okay, what is your timing and play for the other side?
Okay, so my trade's a little bit more vanilla. It's a little bit more simple to put on, but my timing's going to be a little bit shorter.
Yeah.
I've decided to go with a long put. So we're buying a put, just speculating that we think the stock is going to pull down, predicting that we're going to have if our double top comes into play, it's going to be a really nice opportunity to profit from there. One of the things here, I've got in my chart, I've just put the strike price that I've chosen out to the July expiration, the 115 puts. We're going to get to the chain so we can see the price in just a moment. But if we can see our pattern come to fruition, this is actually going to be in place before we get confirmation of the double top. The reason why I've chosen the 115s is it's a little bit closer to the money, which allows me to get a little bit more sensitivity to price movement and a little bit more acceleration. We call that the gamma is the accelerating factor when we're thinking about option pricing. So if we do get those downward movements, we're going to get profits quicker for that matter. And then if we're thinking also, another reason why I've chosen to go long with this, I know we're going to talk risk, is that long options, I don't have undefined risk if it goes against me. Yeah. All I'm risking is the amount that I'm placing here. And if I'm thinking here of going out to July, I'm buying enough time here, so I still have 60 days plus, or 66 if I just to correct myself. And it's only costing me $3 to get into this trade. So if I had $1,000 to spend, I can get 3 contracts and not even be risking the full $1,000. And I can profit. The more it goes down, the quicker it goes down, the more I'm able to profit in this regard. And with any option, we're not obligated to hold it to expiration. We can always exit our trade if we've either reached our max loss, that's not max loss on the trade, but our own individual max loss, or if we've reached a percentage of profit that we've decided for ourselves kind of going into the trade. Which
is the discipline that's very hard for people to have sometimes. It's like, I think it can be higher. And it's like, but you had a target, stick to it.
And that's that's one of those things. Everybody's got a trading story where they're like, I had rules in place for myself, but I slept on it because I was just I was deluded myself to think that it's going to change, or I was maybe being a little bit too greedy. It's that rules-based approach that can help protect the bottom side and protect your profits that you work so hard for.
The risk on that one too, just to really get fine-tuned, you said it was, I think you said if it 1,000, like you would lose the cost of what you actually spent on that, right?
But you're not obligated to, right? You don't. Part of trading is reconnecting with the stock, reconnecting with the charts. Do I still believe what I believed when I did the trade? And if I don't, let's consider an exit strategy to recapture some of those premiums that I spent to get in.
Interesting. And if you're feeling bearish in the short term and bullish in the long term, you can do a little combo. I'm just saying.
You could.
I think that's a pretty compelling.
That's the beauty about these technicals. It's only in the interpretation and the time frames that you're using.
Exactly. All right. Well, I just want to remind everybody too who are watching that the debate was for educational purposes, does not reflect our personal opinions about the stock. So keep that in mind, and again, use your own risk assessment to decide what's right for you. All right, before we move on, you guys are both using a lot of your charts and showing people how to do things, identifying patterns and trends. Jason can tell us more about this and how investors use them and how to interpret them and what may come next.
So one of the interesting things about charts is like you're trying to find patterns. I like to call them interesting looking features on a chart, right? Like we're trying to find, is the trend going to continue, or do we think the trend's going to reverse? Those are to boil it down to two small facts. I'm going to show us one pattern, and we're going to examine other patterns in future weeks. Here, and actually, you had one up earlier.
I had one today.
You had one earlier on. We're going to look at the head and shoulders pattern.
Okay.
So this, I'm going to look at it from a head and shoulders top position, meaning that if the pattern comes to fruition, we're expecting a potential downward move. Aaron had the reverse on his chart earlier in the day, but let's just jump right in. I'll show you exactly kind of what we're looking at. Also, just to state that what you look in terms of a textbook in a trading pattern is not always what's you're going to see on the chart.
On the charts,
but you're going to try and make the best approximation to what that is, so we can get the details that we want.
Got it.
All right, so I'm going to go ahead and choose choose the path functionality here. Let me
This
grab.
is what stock this is?
This is on AXGN.
Okay.
Is the stock here. So we're going to go ahead and choose the path. I'm going to highlight the head and shoulders here. We have our left shoulder appearing here. We can move all the way up to the top, and then because I'm choosing the path drawing tool, I don't need to continue to go back to draw new trend lines each and every time. This is something that we picked up along the way. So we're still learning each and every day with this. So I've got our left shoulder forming on the left, as you would expect. Typically, the head is going to be your highest point in the drawing. Then we can go down and find the bottom towards our right shoulder, and then we have our right shoulder forming on the right hand side. Typically, you're going to look to see that left shoulder come down here. You know what? I'm going to draw one additional line on here to connect all of those low points on this. Oops, my drawing has continued to go here. Let me double click it to get it off. I'm going to go ahead and put a trend line on here, because what I want to see here is I want to connect those pieces together so I can see what's called the neckline, which is going to help me understand what the expected move is. If I go ahead and connect all these together, what I'm seeing here is two things. I can be able to estimate the move, which I'll show everybody in a second. But most importantly is we're looking for confirmation validation when we're doing technical analysis. This pattern that we're expecting it to then reverse its upward trend is going to be confirmed when the right shoulder falls below the neckline that we've established. All right, now let's talk about what we can expect from the pattern. We do that by drawing another trend line on our chart here, so we're going to really get some good drawing tools on display. From the top of the head down to the neckline, if we go ahead and draw that in place, and if I end the gear on our drawings, if I go ahead and add that to show the change and hit close, we'll notice it's down $5.70. That's telling me what the measured move is that I can look for on the chart, so I can see if I can capture in some additional drawings. So we go ahead and draw one last trend line onto the chart. Let's get that activated. And if we bring that down the 570, that is where we can look for new pricing levels. You can see with the gap down that the stock price, we've already accomplished much of that, and so there you have it. It's a really interesting way that we can see. We've seen uptrends in the market. Typically, we're going to see the neckline is going to be upward sloping, and we're oftentimes going to see the volume depreciating over time as well. So interesting things to look for. A very involved strategy, but it's one that's very commonly able to be picked out because you've got the three peaks along the way. So now you've got an opportunity to see it, but then you've got some opportunity of what to expect if it comes to fruition. You do get that confirmation of the neckline breaking. That's fascinating.
That's fantastic. Thank you, Jason. And now if there's a stock that you want to see our debaters go head to head on, or any other information you want to see them draw, perhaps some patterns on a stock you're interested in, you can send your suggestion to td.activetrader@td.com. We'd love to hear from you. And for more information about the Active Trader platform, again, scan the QR code at the bottom right-hand side of the screen. This will take you to our TD Active Trader live website. And if you scroll down, you will find a tab that says Join a Live Masterclass. And there's one this Wednesday at 2 p.m. The team is hosting an interactive session about TD Active Trader that's going to showcase the customizable experience. Again, build this so it's all the stuff that you want to see when you get in there, and that ensures you have the tools needed to trade and manage options with ease, just like Jason, just like Kieran. Registration is required and it's open now.
That's me. That's all. So come join me.
All roads lead to Jason in here. There you go. All right, before we wrap up, and I have to apologize because I'm going to get in trouble because I think we're going long, but I just find it all interesting. What are you guys focusing on for the rest of the week in terms of what's on your radar from a trading perspective?
Yeah, so I got a couple of macro waypoints that I'm going to be navigating through this week. Of course, CPI came out today, but PPI is going to be coming out on Thursday morning.
Yeah,
that's
very important.
That's another one. So just for our viewers, it's kind of the price of goods sold by manufacturers. So it'll tell us a little bit about
B2B
inflation
versus B2C.
Exactly. That's what it is. And then we've also got retail sale numbers. Walmart's reporting. Retail sales are coming out. So again, we're going to see that. So there's a bit of volatility that might shake out at the end of the week. And then finally, there's consumer sentiment. There's the University of Michigan index. It's ticking down a little bit, or it's ticking up, I should say, a little bit. So one to keep out on that one. But other than that, we've got earnings from a little-known IPO that just went public in March. CoreWeave, no one would have. This is one of probably the worst timing possible, not knowing what was coming on the other side of March. But CoreWeave is in the AI space. They'll be reporting earnings, in fact, tomorrow there. But they're an AI infrastructure company. They basically, the way I like to think of them is they're like a rental company for GPUs. It's like a Avis or Hubs, but for GPUs, right? So they amassed about 250,000 NVIDIA graphics processor units. In fact, NVIDIA has a 6% ownership stake in CoreWeave. They boast their biggest customers are Microsoft, which drove almost like, I would say, 2/3 of their revenue last year, and Meta. Okay, so they're leasing out their GPU sort of chips for AI development, of course. But on the heels of this, because it's an IPO, it's a growth company, they have a massive debt burden. They have a debt load of almost $8 billion to acquire. These chips don't come cheap from NVIDIA, right?
And they're getting harder to get,
And they're getting harder to get, but they do get first dibs on them, which is kind of their big sales sort of pitch to it. And they have roughly, free cash flow is about -$6 billion because of this CapEx spent to it. Looking at the charts, I don't have a lot of candles to work with. This is what it debuted at.
I was going to say, how do you technically evaluate an IPO?
Yeah, so we had a lackluster debut. They were looking to price in about the 47 to 55 range. Opening day, it closed at $40 over here. It went into this downdrain. There's a bit of euphoria coming into the second day. We had these large candles, but very low volume, and then it just went into this slump.
Yeah.
But then it's kind of picked up. It's on the upward trajectory right now. We just broke past this resistance. It's sitting at this sort of shorter candle over here now. The expected move coming into this earnings, they're expecting a 12 cents loss with the EPS number, so that will be just one to keep an eye on. And they may inform about the AI space overall and just see and this is on the heels of Meta and Microsoft saying we're still committed to our CapEx spend. So it might be a benefit to them.
Yeah. All right. What else is on your radar?
All right, I've got an interesting one here coming up. It's Take-Two Interactive Solutions, right?
Yeah.
My eldest is heavily invested.
Count me a fan as well.
Yeah, no doubt.
How old? How old's your oldest?
15.
Okay.
So
I have a 14-year-old, so
okay, so you're in the same boat for sure. So, all right, so they're the video game studio behind many big titles, but they all pale in comparison to the upcoming anticipation for Grand Theft Auto 6 or GTA 6. There was just a release around being delayed a little bit longer. Now we're looking out towards May 2026. So a couple things I found interesting about that is that it's pushing us out past the holiday season. So in terms of shopping and gift giving, so that's going to be something to look out for. But there's lots of interesting numbers that are being thrown around. $2 billion plus, maybe, from insiders who are reporting what they think they've spent on the development of this game. So
$2 billion.
$2 billion with a B. That's right. So
that's all chips. They're buying the chips to make the stuff. Yeah.
They might need it, but guess what? In the first 24 hours, the expectation is they'll make $1 billion of that back on the first 24 hours at least, or up to $3 billion for the remainder of the year.
Yeah.
They've done a really nice job with microtransactions in the platform, and obviously
which is
generating a lot of tough word. All right, but jumping into the chart here, a couple of things that I wanted to quickly notice here. We did have a big gap up on the last earnings event, but importantly, the gap held. Okay, and then just recently here, we are coming off its highs, another gap down, but that gap down's not, it's been muted a little bit because we've had some really bullish responses. The three candles coming out of the gap down were big and green, nice long bodies, so it's holding tight. So really looking forward to see what Take-Two's got to say when they come up on Thursday after the bell.
Be very interesting. I have to say it's interesting. My son, who does play a few video games once in a while, one thing they've gotten really good at is currency translation. So
that's what it is.
Because they know what this, what what a Canadian dollar is worth and whatever kind of value they're doing. So when they travel, they know currencies inside out and backwards.
It's like a whole auction thing.
Yeah.
Get into it, right?
Exactly.
Roblox initiated that whole idea.
It's amazing what they've done. They
over.
create these ecosystems. Well, you guys are a delight. Thank you so much for having me here.
This is a pleasure.
And it was great to have us here and Jason, and they'll be back next week. And that's our show again for this week. Greg will be back next week. And also, investors, please perform your own due diligence before trading. Thanks so much for watching, and we do hope to see you again next week.